Cybersecurity isn't a trend you can ignore anymore. It's the very spine of how companies survive today. Every moment, someone, somewhere, is battling to protect digital systems worth millions. That's why AI-driven security is exploding right now. And here's the twist. While giants like Microsoft, CrowdStrike, and Palo Alto Networks steal the spotlight, there's a tiny NASDAQ stock under 50 cents, quietly powering the core of this massive movement. Imagine being able to say, I saw this first, when the world finally wakes up to a megatrend. That thrill? It hits hardest when it's undervalued tech. Today we're looking at one such company, an overlooked cybersecurity pivot stock with infrastructure-level potential. But the market hasn't priced that in yet. Stay tuned, because this could be one of the most misunderstood tickers on the NASDAQ. This video isn't about hype, it's about context, catalysts, and real numbers. We're breaking down a cybersecurity microcap, why it's priced 50 cents, how its business is transforming, and why that matters within the broader cybersecurity boom. We'll connect the dots between AI-driven security demand, strategic pivot execution, and real valuation implications, all without glossing over the risks. And no, this isn't financial advice. It's framework first. You'll come away understanding whether a pivot here is trend-aligned optionality or just cheap for a reason. Before we dive into the stock, let's talk mindset. You've probably seen sub-$1 stocks trading cheap and thought, is it a diamond or just dirt? Here's the principle that matters. Trend plus execution equals optionality. Trend means real structural demand, like cybersecurity spending rising faster than inflation, because cyber attacks aren't going away. Execution means, can a company actually convert that trend into profit? And here's the twist. Cheap stocks often stay cheap when the market doesn't believe execution is happening. So ask yourself, are we looking at a failing company or a company that hasn't proven its future yet, but could? That mindset, separating potential from hype, keeps you ahead of the crowd. Now, let's reveal the company. CISO Global Incorporated, ticker CISO, pronounced CISO, listed on NASDAQ. This is a cybersecurity company that started as a managed security services provider and is now pivoting toward AI-driven software, subscription models, and higher-margin recurring revenue. What makes it interesting is the timing. Cybersecurity spending is booming, fueled by AI, cloud adoption, remote work, and rising breach costs. Yet this company is still flying under the radar. CEO David Gemmett has called the transition from services to software a defining moment for the company. That kind of language matters, because pivots can be where big upside hides. Here's where credibility starts to show up. CISO Global entered an exclusive agreement with the Fortegra Group, Incorporated, a multinational specialty insurer, to provide product protection plans for its cybersecurity clients, including up to $250,000 in financial protection for its AI-based endpoint detection and response technology. It also formed a strategic alliance with Financial Independence Group through a collaboration with Cyber Assurance Group Incorporated, creating an integrated cybersecurity and insurance solution that taps into an estimated $2 billion total addressable market in the professional employer organization and financial management sectors. And there's a strategic partnership with Cyber Assurance Group to launch CyberSimple, which combines CISO Global's AI-powered CheckLight platform with tailored financial protection, aimed at the underserved small and medium-sized business market. On the capital side, CISO has been active too. In December 2024, the company entered a securities purchase agreement with investors to issue up to $8,125,000 in convertible notes with warrants attached, providing financing while aligning investor interests. Then in September 2025, it agreed to sell up to $15 million of Series B convertible preferred stock under a preferred equity purchase agreement, a signal of institutional investor engagement. There's also a $6,875,000 convertible note agreement with Target Capital 14 LLC, enhancing liquidity and capital flexibility. And a placement agency agreement with Titan Partners Group LLC to help distribute up to $4 million of common stock to expand its investor base. So this isn't a shell playing defense, it's structuring partnerships, market entry, and investor financing to support growth. All right, let's ground this with hard data. Current price, about $0.5. Market cap, about $20.3 million. Revenue trailing 12 months, about $27.7 million. Net income, about minus $11.5 million. 52-week range, about 30 cents to $1.70. Beta, about 2.2. So, it's volatile. The company just turned EBITDA positive on an adjusted basis and expects software margins around 75% going forward. Here's the mental pivot. For most software and security peers, even mid-tier, multiples often range 3 times to 10 times revenue. CISO trades below 1 times revenue. That's an unusual discount, and it raises a fundamental question. Is CISO priced like a company with no future, or simply one that hasn't proven itself yet, relative to giants like CrowdStrike or Palo Alto Networks? This is not the same business size or scale, but if CISO can shift its revenue mix toward recurring software and execute on its pipeline, that low multiple becomes meaningful optionality, not just cheapness. Now here's where it gets interesting. There is no major Wall Street analyst coverage with consensus price targets for CISO yet, because it's still a microcap. So instead, we use scenario frameworks tied directly to catalysts. Conservative, 6 to 12 months. Market recognizes stability and tighter cost structure. Price target around $1. Base case. Software revenue picks up. EBITDA grows. Price target around $1.50 to $2. Bullish, 12 to 24 months. Strong adoption. Partnerships expand. Margins improve. Price target $3 plus. Now visualize this. From 0.5, these scenarios imply about 115% to 550% plus potential upside. Again, not guaranteed, but frameworks anchored to execution. So why could these targets make sense? At first, margin expansion. Software margins around 75% are wildly higher than services. If software becomes a larger share of revenue, profit expands faster than revenue. Second, recurring revenue. More predictable cash flows invite higher multiples. Think subscription economics rather than one-off contracts. Third, stronger balance sheet. They paid off highest interest debt and reduced liabilities, and that's risk reduction, not just growth talk. Fourth, pipeline and partnerships. CISO sells through insurance and direct channels, increasing reach into SMB buyers. These dynamics are exactly why investors pay higher multiples for peers. They reward predictable, sticky revenue and profit leverage. Now, it's your turn. What part of CISO's transformation resonates most with you? Is the margin story more important, or the shift to software revenue? Drop your thoughts below and tell me what price level you think this stock deserves 12 months from now. And yes, this isn't financial advice. It's an invitation to think critically. Putting this into a portfolio context. Cybersecurity is a megatrend, the kind that doesn't slow down. Think of it like cloud computing in the early 2000s. Demand structural, secular, long-lasting. CISO, at this price, becomes a satellite holding, not a core anchor like Microsoft or Palo Alto, but it gives you direct exposure to infrastructure demand, especially if you believe the pivot to high-margin software gains traction. Diversify with larger Putin names, but keep CISO as targeted optionality. Remember this: the market often prices doubt long before clarity arrives. Cheap today can mean overlooked for good reasons, or just misunderstood execution timing. Most investors dismiss penny stocks, but the smartest ones ask, what am I paying for today? And what could it be worth if they execute as planned? That's not a bet. That's measured optionality with context. Here's the takeaway. Distilled. CISO Global is a small cybersecurity company trading at low multiples, showing initial profitability signals and a strategic shift toward high-margin software, backed by real contracts and partnerships, but execution risk remains real. This isn't financial advice. It's about framework, context, and trend alignment. If this breakdown helped, hit like, share with someone thinking about cybersecurity stocks, and drop a comment. Final question. What do you think is the biggest catalyst for CISO over the next 12 months? Tell me in the comments. I'll highlight the best responses in the next video. See you next time on Kingsley Market Intelligence.